Hello and welcome to the Unity Excel trading model live stream. This morning we're going to be taking some automated trades using the Unity Excel model. Today we're testing on the 1 minute time frame, and we're going to be testing a relatively new market for us. We're going to be looking at cable, GBP, USD on the 1 minute time frame. We're going to be using our mean reversion trading strategy. We're going to be using Bollinger Bands, at least to begin with, and with me to discuss everything relating to the model and the markets is Ren Vallow. How are you today, Ren?
Yeah, good morning, Mark. It's a good morning. It's kind of like a Monday for us. We had a holiday yesterday, and we're getting ready to get started with the trading week.
Yeah.
So
Yeah.
things are good.
Yeah.
Yeah,
So we had a day off in the US, President's Day, and so we're going to have a bit of liquidity hit the market, both in the forex and stocks, no doubt. Futures are
yeah.
pointing down for stocks compared to the Friday
Mhm.
close, so let's see what happens.
Yeah,
We're
it looks a
about
little bit more.
12 minutes to go before the stock market officially opens in New York. That'll be 9:30 a.m. Eastern time.
Yeah, it's a little bit more volatile than I thought it would be this morning. There's
Yeah.
not a whole lot of news. It's just
Mm,
yeah, just maybe it's the earnings making people nervous today.
yeah. So we are exactly, yeah. So who knows what it is? There's not, as you said before, there's not a lot, though. I think there is the PMI data, isn't there?
Yeah, yeah.
So coming out
That is.
fairly soon, but that's not out yet. Due out 9:45 a.m. Eastern time.
Yep,
We've
yep.
had a couple of trades. So we are here today to talk about the Unity Excel trading model, and you can see that on the bottom left-hand corner of your screen if you're watching this live or on catch-up. And you can see here, we've got, if you can see my cursor, I'm going to zoom in here to make it a bit easier for you to see. Let's get the right one. This here on the screen is the Unity Excel trading model. So we've got a standard Excel model. All the calculations, all the features, functions you'd normally expect from Excel are right here in the model. And you can do things like use the built-in features, like change the profit target. And you can see, like I'm doing here, change these things and the capital graph will update in real time. So we're testing the strategy, and if I go onto our terminal, which we are using, we use MetaTrader 5, MT5 to access the markets, to get the price data and to take the trades. Excel does all the decision making, all the prices are streamed into Excel, it does all the decision making, but MT5 is open and that connects to your account, so that handles all the security. So the system you've got is very secure, very safe, and you can set it up to test all sorts of trading strategies, standard indicators, custom indicators, whatever you like, and you can pop it in the model and you can get it to backtest and then trade live for you.
Yep.
So we've been having fun with the latest iteration of the model, haven't we, Ren? Over the past
Yes.
few weeks, you've been testing and trading using the
Yep.
Bollinger Band mean reversion system that we've
Yes.
been using.
So last week we switched from the channels, price channels, over to the Bollinger Bands, and the win rates on the back tests are very similar.
Mm,
But I found that so far that the Bollinger Bands have been very interesting to trade. When they're doing well, they do very well, and the losses you get are very small too. So that's kind of comforting. So far, the win rates, it's only been about a week since we started running that one live. The win rates are very similar in all the back tests. So I'm assuming it's going to look very similar in the forward testing as well.
mm.
And so far, I don't have anything that leads me to believe it's going to, do worse or better than what we saw with the channels. I do think it adapts quicker to volatility. And that's what brought us to the discussion of using the price channels and Bollingers together. So
Exactly. Yeah. Yeah. We talked about it a couple of weeks ago. We've actually got them on the screen. I don't think you can see that actually, Rent. So I will log in so you can
all
see
right.
what I'm referring to. Yeah, you can see on the screen here, and I'll zoom in for the people watching. Everybody watching this live, please feel free to drop any questions, comments into the chat, and we'll be happy to respond.
Yes.
So let me just log in here. Actually, there's one other thing that I will show in a moment, so I'll just get that set up. So we've got one thing I said I was going to talk about at the start here is the seasonals.
Yes.
These are stock price seasonals, and we are testing and trading Forex, but there's absolutely no reason why you have to use Forex. And of course you don't. There's commodities, there are stock indices, there are ETFs, there are just about anything you would like to trade. Bonds, interest rate, futures, any prices you get through MT5, you can trade them using the Unity Excel trading model.
Yep.
So one thing I was going to show, let's get the right thing ready. One thing I was going to show is the seasonals. So got on the screen the S&P 500. You can see here that we haven't always in recent times gone particularly nicely with the seasonals, but we do look like we're starting to follow them now, and in particular the chance of some seasonal weakness.
Yeah, it's that time of year where we do experience a seasonal weakness. So, but last fall the seasonal, normally we get the strength in the fall that we didn't really see a whole lot of that in the S&P. So who knows this year?
Yeah.
Maybe it will be the opposite effect.
Well, exactly. Yeah. So that was the S&P. You can see very, very similar picture in the QQQ, triple Q there. And yeah, let's see. Prices at the moment are looking pretty weak, so could be due for a seasonal fall. But that's on a daily time frame. And we are trading and testing. In fact, we're trading on the 1 minute time frame, but Unity, you can use any of the time frames as standard available in MT5. So that is 1 minute, 2 minute, 3 minute, all the way up to weekly and even monthly charts. You can test and trade on all of those time frames.
Yep. We kind of mostly focus on the longer term time frames for real live trading. At 5 minute probably being the fastest time frame we would try to trade, just because of the slippage and commissions. But yeah, you can trade anything.
We're doing the 1 minute today just to demonstrate it is absolutely possible. And you get good execution as well, but you need a strategy that is going to overcome the, as you say, the slippage in commissions. And that's not easy to do on the 1 minute time frame. You probably actually need a strategy that is on a higher time frame. You can trade it on the 1 minute, but you're looking for indications that come from a higher time frame, so have a longer holding period.
Yes, yeah. You need larger trades to make up for the slippage in commissions.
As simple as that, exactly. You need larger trade. So we've got, let's go into the MT5. You can see here on the screen here, we've taken 3 trades already this morning. First one of those, we went below the bands. I'm going to highlight that with my cursor over here. We went below the Bollinger Band. We continued to go a bit lower before going higher. Then we went outside the bands to the upside. We took a very short, sharp sell trade. Took a profit on that one. Went straight through the bands to the other side, and we took another trade which went lower but then bounced back higher, and we took a profit on that one. So at the moment we're on about 66%, which is roughly the win rate we would normally expect, isn't it, Ren?
It is. It really is.
It's not far off.
This particular strategy, and if you've read articles about using Bollinger Bands in this way, it really does run in that upper 60s, sometimes lower 70s when things are going really well. And I think this is where picking the market that you're trading will help you as a trader. Like if you find that market that is in a range bound trading zone, those are great markets to trade for the Bollingers. Bouncing back, mean reverting. This strategy seems to do a little worse, like maybe in the lower 60s to mid 60s when you get into a trending market. it can still nip out some profits though, even in trending markets. But yeah, you're looking for that range bound or, trading market, whichever you find is doing that. This is a great strategy to pop in there.
Yeah, that's right. You can look like I was just referring to a moment ago. You can look
Yeah.
on that higher time frame, whatever that might be, hourly, 4 hour, even daily, to identify something that is appropriately range bound. It's bouncing back and forward. We expect mean reversion to dominate, and that is the type of market that performs well for this type of strategy.
And it really does. I mean, so using it in a classic way works well. So Bollinger really got something with these standard deviation bands, and it works. And sometimes, if you're getting into a very strong news market, it's probably another good strategy to turn off, because that can change the character of your market. So if you're going from a range bound market to like a trending market because there was a sudden large news event, then you would probably want to step aside just in case the character of the market would change after the news.
Yeah.
But yeah, you can really focus on trading this in range bound markets confidently, I think. And same thing with the channels too. So I think both of these lend themselves really well for that.
Yeah, yeah. So we actually got an example on the screen here for MT5 showing both the channels and the Bollinger Bands. And we're using both of these because these are both indicators that people use all the time for mean reversion strategies. And if you saw that, I'll just highlight it here. We've just taken a short trade outside the bands. We'll see what happens. And what we would like it to do is to come back into the recent range, but we'll see what happens.
Yeah, another nice one about this I found is that if you set your profit targets and stop losses pretty accurately on this, you can prevent big losses. So that's the main thing about these automated trading strategies. So even when it does go against you and the market does change character, you're essentially going to take a paper cut. So it's not going to be the end of the world.
Exactly. It mandates discipline. If you have discipline in the strategy that you have developed, there will be the Unity model will enforce that discipline on your trading. And that is probably maybe the single hardest thing that all of us face. It's following the strategy rules time after time, each time, and actually follow, it's as simple as that, following the strategy. And
exactly. That's the hard part.
At that point.
I think the easy part, which I think some people really focus on this as the hard part, but the easy part's finding the character of the market. Is it going in one direction trending, or is it range bound? I mean, I think that for being and having this as your trading assistant to do the actual hard work of following the profit targets and stop losses, for me, that's the hard part. I can easily find markets that are trending or range bound and apply this strategy. So I don't need an indicator to tell me, oh, the market's range bound. I can just look at the chart. It's obviously range bound, or it's obviously trending. So we can apply the strategies that we know work in those environments, and then let the trading Unity trading platform do the hard work of following the rules.
Yeah, that's a really, really good point, isn't it? That the thing is finding the appropriate market to actually trade it on, whether you're looking for directional bias, whether you're looking for volatility bias, whatever your rules are for finding the appropriate type of market conditions for your strategy. Once you've done that, you've identified some good candidates for trading, then you can afford to let Unity just do its thing and follow the rules every single time.
Yep, just let it loose and make some money.
Yeah, exactly. Yeah, exactly. I'm going to say again that we've had another trade there. So we bounced nicely back. I'm going to zoom in once again. You see we went outside the bands here. And we're getting the nice sort of mean reversion type trades we want to see.
Yep, and that's what you would expect. If you're fine, and you this morning when you took a look at the markets, you looked at this one and say, I see a little volatility here and it's kind of range bound. That's the kind of candidate you're looking for.
Exactly, 100%. So other ways of identifying good markets, good candidates for letting Unity do its thing are markets where you have a directional bias as well. So you've got some overarching trend, for example, You only
Yep.
want to take stock trades to the upside,
Hmm.
which would be a trend in itself because stocks do tend to trend upwards most of the time. You were looking at, say, stock ETFs or even individual stocks. Well, then you could do that. Buy the gap, sell the gap, however you want to do it. Buy the gap if the market opens up down. You want to get in there. You want to follow that gap. You can let Unity do that. Follow that type of strategy.
Yeah, exactly. No, and that's great. It just the main use for Unity is to let it do the hard work of following your target, your profit target and stop loss. Follow the rules of the strategy according to the indications that you're getting out of Excel, and you apply the trades.
Mm.
And it does that. It does the great job of that. Even like running the Bollinger strategy, like last week when we were running it, I kind of knew we had gotten into like a more downward trending market, then an upward trending market. It was like very
Mm.
clear that it was moving in one direction. I just let it run because I'm trying to get a feel for how this would perform. So even if you blindly pick the wrong market, you're still going to do okay.
That's right. Yeah, you should still do okay. It
Yeah.
can be paper cuts. That's fine, but you
Yeah.
should still do okay. We've got so many different ways. I mean, I'm absolutely obsessive about having different ways to exit a
Yes.
trade. There's so many different potential ways to exit a trade. Once you're in the trade, that's when the roller coaster starts. The emotions. Is it
Yep.
in profit? Is it in loss? I like, as a bit of a safety blanket, having lots of different ways to exit the trade, but
Yep.
you don't even need them. You've got one simple, repeatable rule that's going to keep you safe. That's all you need.
Yep, exactly. Yeah. So we did okay last week, even though I was like, I already knew. I was looking at the market. I'm like, hey, I wouldn't be trading the euro today with this strategy, but let's see how it does.
Mm.
Following the rules.
We
You
haven't
know.
really tested cable much, even though I've done
Yeah.
a lot of in recent weeks. I've done a lot of long-term testing on the trendiness of different forex pairs. Cable
Yeah.
is constantly over the time period which I'm looking at, which is the last few decades. It's either the worst or one of the worst trending markets. I don't know why. It seems to just get to a point and gives up and goes again. Whereas the euro has got such better, Euro
It does.
USD, I'm talking about here, it's got
It does have
such
a
better
better trend.
trends. So I do
Yep.
not understand why it performs so poorly, but maybe it makes it a good candidate for mean reversion.
I think it makes an excellent candidate for this because yeah, that's exactly the kind of candidate we're
Mm.
looking for. One that
Yeah,
can't keep the trend going.
indecisive markets. Yeah, so no,
Yeah.
that's absolutely right. So Euro is good for the intradays because it's low
Yeah.
commission, it's very, very
Yes.
tight spreads. Cable, you'll be paying a little bit more, so you have to get bigger trades to compensate. But if you have a higher win rate, that will help to compensate.
Yeah, it definitely. I'm going to explore it more myself, Mark. Now that you
Mm,
brought that to my attention,
yeah.
um, but yeah, I think that that's an excellent candidate. It could be a cash cow for the Bollingers.
Yes. Yeah, that's what we want to hear. That's what we want to
Yeah,
see.
it
So we've
really
been
could.
running this now for about, what is that, about half an hour or so. We've got 4 trades. We've had 3 winners, so we're up to about 75%. We,
Wow.
we would
Okay.
expect to balance out somewhere between
Yeah.
60 to 65. 70 would be a superb return for this type of strategy,
It is.
unless you're able to really, really understand your market, and in which case the sky's the limit. You can push this up to 70 and beyond. If you want to use this type of system and you want to really understand a particular, say you want to just trade S&P futures, or you want to trade gold, or a market that you really understand and you have an appropriate strategy, you just need something to implement it for you, well then the sky's the limit to how high you can push the potential for the win rate.
Right. And the other thing, one thing I do like about this mean reversion strategies is that you have a really good opportunity to beat the underlying market, which
Mm,
I think in trending markets, it's hard to beat even if you have a really good trending strategy to trade, it's hard to beat the underlying market because it's moving in one direction
mm,
solidly. So you'll end up taking some stop losses here and there where the market itself would just keep running higher ultimately.
mm,
So you might be a little bit less than the underlying market, but with these mean reversion strategies, when you find a market that's like in a trading range like the cable, you can easily beat the underlying. Maybe it makes 1 or 2%, but you've just made 10.
right. Yeah, right. Yeah, and it doesn't have to be mean reversion. I think we're coming around to the idea, and like you just said a moment ago, Ren, that what we're trying to do is test general principles rather than go down to the really, really fine detail. We'll do that for ourselves at some later date. But at the
Yeah.
moment, we just want to make this solid. We want to make it repeatable, time after time, sticking to the systems.
Yep.
But it doesn't have to be mean reversion. I think this is what we're coming down to, that mean reversion probably does work better, particularly on these 1 minute time frames. We tested and traded quite a lot using NASDAQ futures, and
Yep.
we did get a bit chopped up. In fairness, we got a bit chopped up when the volatility kicked in around about this sort of time. The markets have been open 5 minutes.
Yep.
So I'm going to just go back to the terminal because we are taking trades here as we talk. So we had another one there. So we went outside the bands there. Cable's doing us proud this morning. So 1, 2, 3, 4, 5. So we're up to 80% win rate. Today we've got
Nice.
another winning trade, another small winning trade. And we've got a rule that is being applied here. I think this is the rule that we're using. And I like it for these mean reversion strategies. It's a variation on my strength close, which I certainly didn't invent, but I like to talk about and try to encourage people to try the strength close, exits position when it's moving in the direction of the trade. And we've got a simple version here whereby if the market moves at least 1 bar greater than, so the bar has got to be greater than the ATR, the average true range, then it will exit in the direction of the trade. So it can just exit on a single bar, providing that bar is greater, the close to close move is greater than the ATR, and that is the rule that we're using to get out of some of these trades today.
Yep. That has worked for me as well, Mark. That is a very nice rule to have for an exit. I've noticed on all the strategies we've run over the last year, when we started implementing that it improved my win rate.
Yeah, I mean it's like everything in the spreadsheet. You can switch it on, you can switch it off, you can actually customize it. You can say you want to see 2 bars, and that would be more appropriate for more of a trend following strategy. You might even want to see 2 or 3 bars,
Right.
because trend following you don't want to cut your profits too
Right.
quickly. But for mean reversion, particularly in the cut and thrust of a pretty active market that we're seeing at the moment, as the US just gears up for a trading week, it's nice to be out quickly.
It is. It's really nice. One of the interesting things about the Bollingers, you have a setting in there to set the minimum width of the bands, because like if the bands are too tight, you don't want to get into a trade because it really is a pretty meaningless indication. Have you noticed any improvement using that, or have you done any work with that?
I did notice, I've just zoomed in here so people watching can see this. We've got a minimum width filter. The logic for having a minimum width filter, a minimum width filter, is that we don't necessarily want to be entering on really, really tiny, when the bands are just, they shrink and they get wider, and there is almost certainly an optimal width. I've found that the very, very wide bands are already compensating for a lot of volatility. So generally speaking, the results that I've seen is that it's not too bad. Even if the market looks very volatile, the Bollingers are already reacting to that. But when they're very, very tiny, the potential trade size is going to be smaller as well. And that's the logic for this entry. So I have not tested it on this market that we're running today, but that's the logic behind that filter.
Yeah, I haven't done much work with it either, but it makes a lot of logical sense to me. So I figured I'd ask today if you've played around with it and found like one that you find that's a good minimum width.
It's gonna vary by market and by time frame, because it's not done on a percentage basis. That would be easy to implement, but at the moment it is done in terms of pips or points, depending on what you are trading. So it's an absolute size. So you would have to vary and test it on different markets.
Yep.
So if anybody is watching this video, live or on catch up, please drop us any questions. And if you want to get started with Unity, there is a link below this video and you can find out more information. Drop us an email. If you want to learn more, if you want to have something that is customized for your specific use, there is something that we can do for you as well. So please get in touch with us. All the information, you'll find it below the video.
Yep.
And yep. So we're going to go on for another few minutes today. I think we've had a really good one today, haven't we, Ren? So we're at 80% winning trades.
Heck yeah, that's great.
Got another trade open there, but we've just missed our band. Bit more. The reason we're getting more trades today compared to a week ago is that I've set the bands tighter. So we are going to get more trades. Possibly, arguably less quality. So something you need to obviously investigate and backtest. But we have for sure had more trades during the actual webinar today.
Absolutely. Yeah, this is really good. And this is really good to see it work live like that. And the win rate being 80% is pretty nice.
Yeah,
I wouldn't expect that over the long term, but
yeah. So it's doing well today. We're showing 76% winning trades, which is probably a little bit ambitious for this type of strategy. This type of I don't want to put it down too much. This type of dumb strategy that is mechanical strategy, that is using indicators that everybody knows about. It is using them in a repeatable, consistent way. And quite often the majority of market participants are doing something absolutely that is nothing to do with whatever we are doing as traders. So we're just trying to capitalize on small inefficiencies, things where the prices have got out of whack, and that's what we're trying to capitalize on, particularly in this 1 minute time frame.
Yeah, that's for sure. Yeah. Yep.
If we were testing and trading on the hourly, 2 hourly, let me just have a look what's available here. There's tons of different time frames. I've talked about it last week. I like the 12 minute.
Yes, the 12 minutes.
MT5 standard has got 1 hour, 2 hour, 3 hour, 4 hour, 6 hour, 8 hour, 12 hour, daily, weekly, and monthly, as well as a whole host of different 1 minute based time frames as well.
Yeah, absolutely. And if you really, really wanted to, you could do a custom time frame that wouldn't be the same as what MT5 has. But yeah, for the most part, that's those time frames cover the bases.
Yeah, and the advantage to doing so would mean that you're just slightly out from what the rest of the market is seeing. There is, I certainly believe there's going to be a certain amount of things, particularly news announcements. They always seem to happen on the hour or on the half hour, or at least on the 15 minutes, like the one we've got today, coming out in about 1 minute time, Eastern time. So that does have an impact if you're trading just out of sync with that on the 12-minute time frame, for example.
Exactly. And the other thing that's kind of a little bit different from when you're using Unity, the ability to trade outside of the normal time frames that everybody else is trading. If they're trading the 1 minute, or let's say they're trading the 5 minute, if they start it right on the hour, everybody, like all the other trading systems, are all starting right on the hour, but we might start on the 3 minutes in. And then your cycle is then from that point forward. So you're running a different cycle than everybody else. And I noticed that if you run exactly on the hourly and minute time frame that everybody else is using, I tend to see a lot more whipsaws because there's so much activity right on the hour, or like on the opening bell. On those types of time frames, there's so much volatility, you end up getting whipsaw trades. Whereas if you're like a little bit out of sync with everybody else, you're getting more pure results that you would see in your back tests. I find that's how it worked for me anyway.
Yeah, I think that's absolutely a good point. So what we're seeing right now, a spike, is that PMI data hitting the market. The immediate impact is to strengthen the US dollar. So we've gone way outside our Bollinger Bands. A sensible approach might have been to switch off the auto trading before the announcement. But we're just going to follow it and see what happens today.
Maybe you'll get a winning trade out of it.
Maybe we will do. Yeah, we had a massive spike there, so it will be interesting to see how that goes. I haven't seen what the news is, but very easy to know in advance that this big stuff is coming out and be able to switch off or even switch on if you want to look for these really crazy price moves and you fancy trading that sort of thing. You can do that as well.
Right, you could focus on those types of events, or focus on turning it off during those events.
Yeah,
There's different approaches for sure. So, did we actually get the trade when the news event came out?
we certainly did. Yeah, we certainly
Okay,
did. So
all right.
yeah, it's just bouncing around at roughly the just below the entry point at the moment. So there's going to be looks like it's going to set a direction for the US dollar. So
Yeah,
USD strengthening. I really, with all the weird news we've been having recently and the weird price moves, I wouldn't even like to guess at which way the news, the PMI data went.
yeah. I've given up trying to guess what's going to happen with news events. Sometimes
No,
yeah, I've just given up.
no. But you can easily, like we said, program big candles like this. If we've got an enormous candle, you can easily program that into the model.
Yeah, you could. And I think that it's best to, like, for most traders, no matter what your strategy is, to keep an eye on big news events, have a calendar of events. So you're not, if you want to trade them, that's great. If you don't want to trade them, just turn your automated
Yeah.
trading off.
Yeah, it's absolutely all dependent on your risk
Yeah.
tolerance level, your profile, and the type of strategies you like to implement.
You don't have to get too fancy. Just, yeah, a regular old a calendar will do
Yeah,
it.
yeah, exactly. Yeah. Right, so we're going to wrap up today then, Ren. Thank you very much for being here. Anybody that is watching or on catch up, you want to know more about this, you want to get started trading your own strategies in Excel in a nice, easy to use environment. Information below this video on YouTube, so please check that out. So thank you very
Oh,
much today, Ren. We've had a good session. We've got one trade still open at the moment, but we've had a few nice winning trades as well.
and an 80% win rate today.
Yeah, we'll take that.
All right. All right, Mark. Have a great day. Thanks
Yeah.
again.
Okay. Thank you very much, Ren. And once again, anybody watching this, please get in touch if you think you would like to start auto trading using Excel.